I told you JPMorgan would be out. Let's get back to Leslie. Leslie, there you are again. Good to see you.
Here I am. Thank you, Joe. Yeah, you can see shares of JPMorgan up about 1% after a beat on both the top and bottom lines here. EPS coming in at $5.94 per share. Revenue on a managed basis was about $50.5 billion, and net income up about 13% to $16.5 billion during the quarter. A lot of attention this quarter, of course, on what's going on in the markets division of each of these banks, and JPMorgan had a great quarter here. Markets revenue up 20% year over year. Fixed income markets were up 21%, and equity markets were up about 17%. So the fixed income markets, at least how much they're higher, is definitely a difference from what we saw with Goldman Sachs yesterday. In this statement, Jamie Dimon, the chairman and CEO of the firm, giving some comments about the macro environment, where he says the U.S. economy remained resilient in the quarter, with consumers still earning and spending and businesses still healthy. Several tailwinds are supporting this resiliency, including increased fiscal stimulus, the benefit of deregulation, AI-driven capital investment, and the Fed's asset purchases. And then he talks about the complexity of risks that are out there, including geopolitical tensions, wars, energy price volatility, trade uncertainty, large global fiscal deficit, and elevated asset prices. So a lot of that kind of mirrors what we saw in his annual letter a few weeks ago as well. In terms of investment banking fees, those were up about 28% year over year. And I'm still digging through this release, so I'll get back to you with more. But you can see shares have come back a little bit, but still up about 0.5% pre-market, guys.
I have to say, Jamie has probably been pleasantly surprised that some of his worries in the past haven't borne out in terms of the economy, I think. And these guys, they're worry warts. I mean, you talk to, like, Blankfein was on. I read his book. That's all they do is worry. That's what they need to do because they're in that business. Yep. But Jamie, in the past, whether it was inflation or whether it was just the strength of the economy, he's raised the red flag a few times. Well, and here we are.
I think it is their job to risk manage for the worst case scenario as, stewards of these large banks. So I think he has basically said, interest rates could go to 8%. I have to manage my firm with the assumption that that's in the realm of possibilities. Whether it does or not, remains to be seen. But I have to make sure that, as the steward of this, multi-trillion-dollar behemoth, I need to make sure that, we wouldn't be caught off sides if that happened.
Yeah. Now we're down 1%. I don't know whether that means anything, but it did change. Maybe at $6 on a $300 stock. We'll see. Once again, it's hard to in illiquid early morning trade. It's tough to really say anything. But we will watch that, and the Dow moves around with that too. Thanks, Leslie.
You got it.